What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is October 11th of 2022. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, I want to do a brutally honest video on the current state of the altcoin market. I know most content creators out there usually jump the gun to talking about the next 5 or 10x in the crypto market, but I gotta tell you guys, my big focus here is to help you guys prepare for the worst. The best investors and traders think about not how much they can make, but they first think about how much they can lose. And it's about not only making sure you're hedged throughout this bear market, but on top of that, that you find the plays that can really shine in the next bull market. And speaking of which, we're gonna talk about how we look for those plays throughout this video, as well as doing a sponsored review of one of our long-term partners, Kava, which is one of the exciting layer 1 protocols that I'm personally interested in, alongside some of the ones we've talked about on this channel like Radix. So stay tuned, you guys won't want to miss it. Now, let's go ahead and kick off this conversation here, guys. As we already know, Bitcoin has been on a near year-long bear market. Man, the time has flown, or for some people, it's really dragged on. But the key thing here that I want to talk about is that while things have been bad, while Bitcoin has definitely corrected to a degree, and a lot of altcoins have dropped in severe double-digit territory, I really want to emphasize a point that we've talked about on the fact that things can get worse here before they get better. I don't mean to be a negative Nancy, don't want to be all doom and gloom. I'm here, though, to help you guys hedge and protect your wealth, to do my best here to share feedback. And the thing I've learned here is to usually expect the worst, that there's another leg down here during bear markets. Similar to how when we're in bull markets, when we get dips, we buy them. When we get relief rallies in altcoins and in crypto during a bear market, we usually sell, and we usually take advantage of it and we go back into cash, right? And the reason why I want to emphasize this is because while some people are excited that many altcoins might be down 70, 80% and might sound great, people really negate the fact that a decline from 70% to 80% to 90%, those 10% intervals are massive changes in valuation. And you really could be buying at really heightened valuations, the likes of which may never return back to that value if you don't pick the right plays, or if we're in a longer drawn out bear market. So these are the things to kind of prepare yourself for here. And I want to go ahead and just start by talking about one key thing that I think many people have not considered. This is really what I fear at the end of the day here. Right now, if we take a look at CoinMarketCap, you can take a look at CoinMarketCap, CoinGecko, whichever site you prefer, any kind of coin aggregate site, you'll look at the website and probably check price action, a lot of details in the market. But one thing that I think people forget to check that is right there on the homepage of both websites is the amount of cryptocurrencies out there on the market. There are, according to CoinMarketCap, over 21,000 altcoins out there. 21,000. Right? You could take all the exciting established layer 1s, Bitcoin, Ethereum, Solana, Binance Smart Chain, you name it, Polygon, all these really interesting networks. But they are just a few select altcoins out of the broader range of altcoins that somehow have a dollar value associated with them. And I likely believe, just like we saw back during the dot-com bubble back in the early 2000s, and late 90s, we are going to see a flush out. What many people don't know about the dot-com bubble, outside of the fact that it was already brutal in the sense of its percentage decline, is the fact that over 97 to 98% of all the IPOs that launched in the 90s that played a role in shaping the NASDAQ composite, they evaporated. They went away. They fizzled away. So it's incredibly important to keep that reality in mind when we're talking about a potential 40, 50, 60% correction, similar to the dot-com bubble, for equities over the next year or so, and what that's going to mean for crypto. If people are saying that we can't go any lower, folks, I've got to tell you, they got another thing coming to them. Because the key thing here, again, I respect everyone's opinion here, but I got to stand a bit grounded in my opinion here because of the fact that crypto has never lived through one of these corrections. It has only been an asset class that's traded and liquid on exchanges during a decade-long secular bull market where every time equities would dip 15, 30%, which bear in mind they're much less volatile asset class than crypto, every time they would dip, the Fed would come to the rescue. And right now the Fed cannot do that. If they were to do that, inflation, which is already out of control, which is already still stifled at current levels here, where the Fed has not been able to contain it, is just going to get worse. So essentially speaking, we should expect that rates are going to continue to climb, that quantitative tightening or balance sheet reduction at the Fed are going to continue, and that means that altcoins are likely going to be moving lower, the more risk on assets. Don't believe me? There's a lot of things to prove this. Seeing large plays like Terra Luna completely collapse in this bear market, some of the more established ones, if you think about it, Luna was one of the top altcoins. It was coming up to potentially rival against Tether and Ethereum. And on top of that as well, if we just take a look here throughout history, there are two good visual signs that I think kind of teach this here. If you're talking about altcoins as a whole and kind of layer ones, this is a snapshot from CoinMarketCap's list back in January of 2017. I remember looking at this exact list here a long time ago in real time back in 2017 when I was starting to get interested in crypto. I started my journey back in 2016 after trading equities and commodities. But we started the channel in July and we were looking at a lot of these names here. A lot of these were some of the protocols we thought would lead the way. And many of them are probably familiar. Bitcoin, Ethereum, XRP, Litecoin, maybe Monero. But if you look down the list, the more and more you go here to some of the emerging plays here, you'll find that a lot of them are really no longer big plays. You've got Factom, Economy, NIM, as well as Steam, MadeSafeCoin, Augur, Dash. We've got as well like EDC, Blockchain, Game Credits, BitShare, Swisscoin, Ardor, right? All of these plays that really, in the end, faded out of history. And I find that there's a lot of key signs here that explain why these protocols didn't work out. Sometimes ideas just don't stick. Crypto is really risky. It's not meant as an insult. It's just a reality here. Same with a lot of the startups in the dot-com bubble. Probably had great intentions, didn't survive. Maybe they didn't have product market fit. Maybe they didn't have a go-to-market strategy. Well, on top of that, it's not just the fact that we're going to see a lot of these layer one or altcoin projects, or ERC20 tokens fade out. We are likely going to see a huge flush on the NFT market. Just recently, Logan Paul's NFT, many of you guys might know Logan Paul, was purchased originally for $623,000 during the NFT hype. Now is only bidding for around $10. Yikes. So we can see that essentially a lot of this value here is artificial in the market. And a lot of the dollar value that you may think you have in your portfolio, right, maybe even though it's down 80%, might even go down to 90% or potentially near zero. I've seen it before. There's a lot of market leaders who were doing well in 2017 who just never really came back. Even a lot of the altcoins in the later stage of the bull market, right? So what we need to do here is to understand the reality. If we take a look at our measure here for altcoin dominance, which takes into account Bitcoin, Ethereum, and stablecoin dominance in the market, we can see that we're likely set up here to spring even higher, meaning that as these plays make up a larger percentage of the market, as we go down in dollar terms, this means that altcoins are likely going to get hit harder, generally speaking. And we've got to be able to be smart and find the plays that are doing a couple of things. The first major thing that I'm looking for here in a lot of altcoins throughout this bear market in order to find plays I can hedge myself in if I still want that crypto exposure, but also plays that are going to do well in the next bull market. The first thing is that they got to be building just as much, if not more, than they were during the bull market. One of the biggest misconceptions that I find here is that people think that value creation happens during a bull market, and that couldn't be further from the truth. The value is realized during the bull market, but the value creation, the deployment of new protocols, the deployment of network upgrades, they come during these bear markets, during the most difficult times when no one is watching because the noise is filtered out. People start establishing real partnerships, real value creation. They start building and creating value because there is a need to do so. In a bull market, you can announce an update, you can do this or that, and that's enough for you as a protocol to potentially see your token go up or for the network to get more adoption and people to learn about you. You need to strive hard in the bear market. And what I find is that we filter out a lot of the noise by just simply looking for protocols that are doing just that, that are building rather than going radio silent and potentially even passing on responsibility to someone else where the team starts to get stagnant and not really work on the project, right? So that's step number one there. Another major thing as well is on top of building is around bringing partnerships and developer interest, because where the developers go to build great applications in this space, the users will eventually come. Developers have a very keen eye for finding out which protocols are the protocols to build on, not only because they know which ones are easy for them to build on, but on top of that, by the fact alone of knowing which protocols are going to be easy to build on, that is going to bring about a lot of developers to create applications applications, which then users will likely want to use. The more applications you have in this case, and the easier it is to build and create value, the more likely it is to succeed. This is why, again, we've talked a lot about plays like Kava and Radix, some of our layer 1 plays, as well as Energy, that either will utilize familiar frameworks like the EVM, Cosmos SDK, or build entirely new frameworks that they believe are going to outpace that of the traditional systems. But there are still so many networks out there that just don't have proper development resources and tools that allow for people to create value, right? So these are kind of the big things here. And then the third thing I look for here is price action. Now, the reason I care about price action at the end of the day when it comes to altcoins is because all the while I think I do a pretty good job of research, and heck, many of you out there might do a great job of research yourself, we may not know exactly how to spot the best play out of 20,000 altcoins. There are ways to filter it down and get down towards much more established few players. But to really find those altcoin gems, as everyone talks about, is actually incredibly difficult. It's much more difficult than what it used to be in the market. If you're really looking for those plays that can really grow out and really do well. And one of the things that can help give us hints is market price, because market price doesn't lie. Market price lets us know if people are buying more than selling. Is the market order flow and the bid side support on the order book stronger than the market sell side pressure and the asks on the order book? Now, again, just on this general talking point here, as we run through a lot of the different altcoins in the market, take a look at Ethereum here, right? Ethereum had a major drop back here in early September and is now starting to utilize what used to be an indicator of support, the 200-day moving average. I've got this established to be the 200-day here, even though we're taking a look at the weekly chart, right? We can see that during a bull market, this was kind of a buy the dip opportunity. And this is very similar to equities as well. Usually the 200-day moving average is a point where it's time to buy equities and get bullish, right? But what we're starting to see now during a bear market is that a lot of these altcoins, which have remained overbought, in my opinion, are now starting to tread resistance around these moving averages. And it's not just Ethereum here. It's also places like Cardano, right? Cardano, since back here in October, since equities and crypto really started to, basically decline, we've seen that the 200-day moving average has started to act as resistance practically every time. Sometimes get deviations above it, but it doesn't hold and it rolls right back down. I'm not negative here on Charles Hoskinson or Cardano as a project fundamentally. I'm just saying that the price action is telling me that, hey, I don't really have any need to rush into this. Even if I wanted to dollar cost average or buy it, right, or buy the dip, I should be setting my expectations lower here, potentially looking for it to come down to this previous range or maybe even a lower price range. We'll have to see, right? Again, I'm not here to say exactly where things are going to go. I'm not an Nostradamus. My key point here is to talk about setting our standards here and making sure that we don't get caught here buying what we think is a dip, but in reality, for example, in a play like Solana, if it really starts to decline here down to, say, a previous support range like this, right, where it might take years to potentially recover back up here. I'm just kind of drawing for illustration purposes. There's likely going to be further decline and an accumulation period for altcoins. So again, we have to be much more precise about how we make these engagements. Same here with DOT. Same exact signs on Solana and DOT here, using that 200-day moving average against Bitcoin as resistance. This plays into the point here that I want to talk about, which is that I think we've got to be very sharp about which plays we get excited about. Now, let me be very clear about something, guys. One of the key bonuses as well for the things to look for, and this is really, I think, not just a bonus, but really a foundational question you need to ask when you're looking at altcoin plays. And it's what defined Solana, Avalanche, Luna, a lot of the plays that did very well during the bull market. And that is, what is the value proposition? And for that value proposition, is it needed in the crypto space? Does it solve a serious problem in the crypto industry? Luna was building a decentralized algorithmic stablecoin. It failed, but it also grew to being the third largest real crypto protocol, excluding stablecoins. What about Avalanche or Solana? Well, they built much more highly scalable networks. Avalanche forked EVM, allowing for developers who are already building on Ethereum to just deploy existing applications and build new ones as well that they were familiar with. And Solana as well had hyperscalability, allowing for NFTs, metaverse, all kinds of stuff to be able to be built on top of it. Right? So there's key reasons why these protocols stand out. And we need to understand the value proposition of each protocol we're investing in. It doesn't matter if it's a ERC20 token on Ethereum. It doesn't matter if it's its own layer 1 blockchain, a stable coin, whatever it might be. We need to understand what is the value proposition and is it going to propel and do well during the next bull market? Well, I think we've talked a lot here about what we can look for in an altcoin project, but I want to go ahead and dive in and spend a little bit of time to talk about our partner here on the channel, Kava, because I've been following Kava as far back as 2020 on my YouTube channel. I've been tracking the project for a long period of time, and I think it's prime time that we go ahead and talk a little bit about where Kava is now, because it has changed a lot since we first talked about it back in 2020. So let's go ahead and dive into our review, talking all about Kava and where I see the project going in the long run. Alrighty everyone, so to kick off the review here and in alignment with the video, I want to go ahead and talk a little bit about the basics of what Kava Network really is, but on top of that as well, talk about why to me it checks off a lot of the boxes we talked about earlier that define the altcoin projects that not only survive the bear markets, but thrive during the bull markets. So first off, let's just go ahead and talk about the basics. For those who may not know, Kava is a fast-growing layer 1 network that has integrated two key developer ecosystems into one single chain. It's brought together the Ethereum virtual machine, which is utilized on Ethereum and other alternative layer 1s like Avalanche, and along with that has brought in the Cosmos SDK, one of my personal favorite layer 1s out there in the space that I think not only has a massive developer ecosystem, but by combining these two together allows for practically infinite ways to build and deploy applications using two of the most popular developer frameworks within the cryptocurrency space for building smart contracts and decentralized applications. So understanding this and the kind of power that this brings, I think we need to consider just how much of a strategic advantage this gives Kava as a network versus other layer 1s. Let me explain. Not only does this allow for all the applications and existing users and popular networks like Ethereum and Avalanche to come over to the Kava network, but along with that as well, it allows for the high scalability and throughput of the Cosmos network using Tendermint consensus, as well as the traditional dApps and developer framework that's already been built on Cosmos, giving Kava essentially the biggest network of available developers, high throughput and scalability, and use cases, as well as users to engage and extract value from these use cases. So I think that this gives a really good setup here for Kava to thrive in the next bull market. And I'll be kind of playing into this analogy that I think it plays a lot similar to that of Avalanche in the previous bull market. While at the end of the day, it's taking a lot of existing frameworks in the space, it's trying to re-engineer and rebuild some of the ones that have worked really well, and basically trying to fix the issues that these networks have had or these different types of solutions have had on their own. So trying to merge them together and building a very powerful layer 1 network. Essentially one network, two chains, all within one singular ecosystem. Now, we're going to be diving into a lot of the fundamentals here. There is a lot of things that check off the boxes here. But one of the things I wanted to go ahead and talk about is price action. To be fair, we did do a lot of analysis on some of those other altcoins, and I want to give a fair, candid review here on where I see Kava potentially playing out here. Now, I'm going to talk about two different strategies here, how you can go about playing Kava. Some of you out there are more in the camp that we've set in our bottom here in the market, and some of you as well might be more in the camp that I'm in personally, where we believe that we're essentially going to be continuing to decline a little bit in the altcoin space, right? So essentially speaking, there are two ways to play this here. You know, if you're more of an aggressive trader, if you believe that the market has already bottomed and you're looking for those solid value plays that are continuously building in the bear market, I think Kava is one of those plays here, not just on a fundamentals perspective, but even from a technicals perspective. Let's go ahead and talk about a few key things here. First off, the fact of the matter that they've been holding here since their January price range against Bitcoin tells me a lot about the fact that someone is accumulating here. Someone has been, for a long period of time, accumulating positions here in the lower band range in the event that we're going to likely be breaking out higher here in the next bull market. This is the kind of technical pattern that I like. Many people in the Dash report will tell you guys that I talk about something called the longer the base, the bigger the breakout, or the longer the base, the bigger the chase. Essentially meaning it's an accumulation pattern. Larger players have to accumulate at a slower pace here, and they usually do so during these periods of development, during bear markets. So this not only could set up the foundation for a move up here to 75% against Bitcoin, around this resistance range that we retested back in April or January, or back here in August of 2021, but also set the foundation for a much bigger move higher in the future, right? I don't know exactly if that will play out here or if we're at those lows yet, but again, that would be the thesis for more of an aggressive player in the market. If you're like me though, and you're a little bit more passive and you think that we've got another kind of leg down in the broader space, I think that the next kind of key range here that I would watch for, if we do get the opportunity, is to potentially pick up Kava here around this accumulation range, where we retested back here in 2020 and here in January 2021. That's my honest take here overall. I think that there's a good chance Kava goes down there considering the broader market sentiment, but the big thing here that I wouldn't underestimate is the fact that Kava is continuously building in the bear market. And we'll talk about that as we go through the video. It's why I wouldn't try to short or bet against Kava in the least. I would bet in this case that Kava is going to be holding up a lot stronger than most layer ones that have really gone radio silent. I'm talking about Solana, I'm talking about a lot of these major layer ones out there, Avalanche, a lot of plays that really just aren't building throughout the bear market, in my current opinion at the moment. So let's go ahead and talk a little bit about Kava. One of the big things that's helping Kava to stand out here is its focus on preparing for the next bull market, building as much value in the bear market as it possibly can. And they're doing this through a developer incentive program in the crypto space, the likes of which we have never seen, at least at this scale, and that is the Kava Rise program. Now, the Kava Rise program is a developer and staker reward incentive program that encourages people to deploy and bring value to the network, measured mainly by total value locked. Essentially speaking, if you bring more Kava as well as more stablecoin and altcoin liquidity into the Kava network through its many bridges into various applications, those developers are rewarded essentially for building the applications that people are utilizing and people are taking advantage of, right? So again, they're already trying to incentivize people to build as much as possible here during this bear market. So a lot of it can be realized during the bull market, like we talked about earlier. Now, the Kava Rise program has put up $750 million at the time of the launch of the program in Kava tokens for developers and network participants. This essentially means that with this program, the vast majority of the network is going to be owned by the developers, those who are staking and utilizing these protocols, rather than by venture capitalists and a few private investors. That's something that I really like here. You guys know we've talked about that with projects like Energy before. On here, we love the fact that these protocols out there, there's very few of them, but protocols like Kava are focused on community ownership and those who are actually building on the network rather than just investing and hoping that the price goes up over time. Now, if you want to see what kind of developments here are going on within the Kava Rise program, I recommend you check out one of the Twitter threads from Scott Stewart here. He posted this back in August, and I think it really underpins why Kava Rise is so powerful. But the key thing here that I wanted to dive into is just looking at the metrics here, guys. Kava, in respect to its market cap, is, in my opinion, a pretty undervalued position here. It's sitting at the 15th largest when it comes to TVL here, alongside other plays like Near and Algorand. But it's really not far away from some of the more well-known names like Phantom or some of the layer 2 plays like Optimism and Arbitrum. And I think that it has already paralleled against a lot of altcoins that are currently trading at higher, if not more overvalued ranges, like Algorand, Waves, Gnosis, Elrond, and a lot of other plays like CeeLo, Hedera, and EOS. It's already outpaced a lot of these plays, bearing in mind that it's only really been deployed here for the past couple of months. And an important clarification there is that while Kava as a token, as a protocol, has been around for some time, it only really deployed its layer 1 protocol that merged Cosmos and the Ethereum Virtual Machine, or the Cosmos SDK and the Ethereum Virtual Machine, into one singular network just back a couple months ago. So we really need to keep that in perspective here, just how fast it's already growing here. And we can see through DeFi Llama here, we take a look at the amount of Kava staked on the network here. We've seen a lot of it starting to come on to the network here. And again, with dollar values here, it's very subjective overall because we're in a bear market. Everything in TVL terms is going down, generally speaking, whether you've brought in altcoin liquidity, stable coins, and even Kava itself. But the key thing here is seeing whether or not we're getting more total value locked here in terms of Kava on these different network chains. And essentially speaking, we've got a ton of different applications that have been built here that are either novel to the Kava chain, essentially that they were built on their own and are kind of branded within the Kava brand. But it would be one thing to have some of your own native applications built, But on top of that, some of the big players have come over to Kava, and that is a telling sign for me. The kind of partnership and building of relations that Kava has been engaging in during a bear market has really excited me. Two of which really stand out are protocols like Curve and SushiSwap, which dominate in the decentralized exchange space. You've got plays like Kava Mint that allow you to create stablecoin liquidity from your staked Kava tokens, similar to that of MakerDAO on Ethereum, and also Kava Land as well, where you can start to get yield or interest. But mainly, the partnerships that they've established with players like Curve, and along with that as well, players like Sushi and many others throughout the ecosystem is really exciting to me. And I think it offers not only a lot of opportunity for people to start seeing value realization on the Kava network here by bridging over the liquidity, paying lower fees, and being able to access a lot of the great same services that they're used to. But on top of that, being able to get huge staking rewards here for having your Kava token within these various protocols. There's up to $14 million in Kava rewards for those who are participating within the SushiSwap rewards program on the Kava network. Now, one big thing here that's important to keep in mind here when we're taking a look at Kava and considering this here, with all this value creation here going towards the users essentially, this is going to help propel user adoption, it's going to help propel developer adoption, and if I look back at the past, this reminds me a lot of one of the layer ones that really shined in this previous bull market. I hinted to it a little bit earlier, it reminded me a lot of Avalanche. Now, to be completely candid with you guys, I missed the boat on Avalanche last time, but one of the big things that I admired about Avalanche as I was kind of thinking about it later on, and I think a lot of people really came to realize and admire, was its focus on developer incentives, for incentives to bridge liquidity, for people to participate in the protocols. And through the Kava Rise program, I think this is going to help them stand out very much like Avalanche did in the previous bull market. Again, we'll have to see how it all goes, but to see all this happening, ever since the network has launched, it's been in a bear market, right? So to see all this development here, this is really exciting in my personal opinion. To see this kind of value creation coming in on a lot of these networks so early on is definitely very exciting. Some of them still in the development phases, maybe not seeing a huge amount of liquidity just yet, maybe because they're going through their testnet phase, or maybe have just deployed to mainnet. It can take time to get that initial traction, but seeing a lot of this capital already coming over into implementations like Curve and other major established players within Kava is really exciting. There's a lot of things to look forward to on the roadmap, but one thing that I think is important to understand, we could go through and scroll through all the major network upgrades that will come later on in 2022 and 2023. Essentially speaking though, there's one big thing that I want to drive here for Kava, and that is that while it has started with the EVM and also the Cosmos SDK, I talked with Scott a long time ago, back a couple months ago, we did an interview on the channel, and he brought up a really good point. It doesn't have to stop there. We can eventually add more developer ecosystems into the equation. It can become this vortex of total value locked or liquidity into one singular network. So we're not having to constantly bridge between chain to chain, but rather have the most popular ecosystems, developer frameworks, and all the users from these different developer frameworks in one single network. All under a shared consensus mechanism that's hyper scalable and allows for cheap transactions without the cost of security and all the convenience we could ever ask for, having it in one singular network, and also likely from a singular wallet interface as well. That's where things get really exciting. You're no longer going between one chain to another, you've got it all in one, and developers can use any framework that they choose to use. That is where things get really exciting here. And of course, it's not something you can do overnight. It's not something that Kava will be able to achieve in a flash. It's something that you got to build time and time again on during the bear markets. So if you guys haven't already, I highly recommend you guys go ahead and follow Kava. You can do so at the link down below in the description, and definitely keep up with their updates on Twitter. But outside of that, join their Discord, check out their website, do your own research. For me personally here, I think Kava offers a lot of potential as a layer one, but it's one of many plays out there that I'm currently excited about. And I think it's very important for one to understand that Kava has survived prior bear markets. That's already one great filter here. But it's going to have to continue building here and continue striding forward to stand out if it wants to make it through. I think it's got a good chance of doing that. That's why it's one of our partners here on the channel. It's why I like the project long term, and I think you guys should keep it on your radar nonetheless. But again, do your own research, take a look into the project. If it's not for you, that's fine, but it may just be a good fit for you going into the next bull market. That being said, everyone, I hope you all enjoyed this video on altcoins. If you liked it, consider dropping a like, consider subscribing if you enjoy this kind of content here on the channel. I think there's many exciting plays that will come up in the future, but we've got to be prepared to understand how to spot value and how to filter out the noise. Take care, everyone, and I'll see you all in the next video.